We have an established reputation as an organization dedicated to building the ecosystem of global sustainability and impact investing. We're doing this through educating, advising, and facilitating transactions in global sustainability and impact business, as well as capital solutions for private companies, family offices, and fund groups. For nearly 25 years, TBLI Group has created a vertically integrated ecosystem of education to action through TBLI conferences and TBLI consulting. More about our company can be found at tbligroup.com. This webinar is brought to you by TBLI Foundation, which hosts educational learning experiences dedicated to a better planet. Through the foundation, we build sustainable communities by sharing the people and the experiences making a difference to so many of our lives around the world. Our weekly podcasts bring impact thought leaders that are doing and not only chatting. Now let me introduce my guest today. I was on mute. My apologies. If you have a comment, just type in the lower right-hand corner or move your mouse over the person's name to send them a private chat message. Today we have Leonie Schreve, the Global Head of Sustainable Finance for ING Bank, or as the Americans like to call ING Bank. One of my favorite people, one of the real stars in the sustainable finance world, really working for years, changing the focus of a bank, a major bank, toward investment that provides financial and social return. So I'm going to let Leonie introduce herself, give a bit of background, who she is, what she does. And she has actually a very, very unusual trajectory of where she started and how she got here. Leonie, good afternoon from Amsterdam, good morning from New York.
No, good afternoon and good morning to everyone. Great to be here and to have the conversation with you, and I also hope that you will be asking lots of questions, because that's also the way that I really like it, to have such a virtual conversation. Yeah, so indeed, as Robert mentioned, I've been over 20 years involved in the whole sustainability topic. I've done various things and started essentially in the consultancy space, really on management consultancy, driving also sustainability projects at an engineering firm. And then around 18 years ago already, I moved to ING, and I was asked if I could set up a team focused on environmental and social risk management. And at that time, social and environmental social risk management was really also in the beginning of the market. So I took on that opportunity, and I was thinking, well, probably I'll just stay here for a couple of years. Once the team is ready, then I'll move on to something else. But here I am still at ING. And that's, I think, also one of the nice things at ING, that you can have a lot of opportunities. You do need to create them yourself. But there's a lot of entrepreneurial spirit. And that's also why in 2013 I moved to the commercial side of the bank, and to really drive the commercial initiatives of sustainability At that time, again, a market that was really not there. And we were one of the few, one of the first, I think, really international mainstream banks to drive sustainability into the core of our commercial strategy. And so initially it was focused on, okay, what do we do already into our business line? I've also mobilized a lot of people that really believed in this topic. And of course, there were many people at that time still that were absolutely not believing that this would be flying. And I've seen also many teams before even that time that tried to really establish a commercial opportunity on sustainability, but it never was really successful, probably because it was either very small transactions or with a lead time of a couple of years' time. So for me, it was really important that I identified those people that could help me in really mobilizing the network and the ones that really wanted to be also with me on pioneering this topic, but at the same time as well to really make sure that we closed transactions very quickly, because then only you can show also to the sort of typical banker that you really have a financial impact. So that's what I did. And if I look now, I've got a team of more than 40 people across the globe, teams in Singapore, teams in New York, Brussels, Amsterdam, and London. And we've been pioneering a lot in the market and really shaping also a lot of the markets that have grown now really into big markets. So just to give an example, we have launched the first sustainability linked loan into the market in 2017. Where we essentially agree with our client on very ambitious targets, either on increasing sustainability rating or to have specific KPIs in place. If those KPIs are met in a year's time, then they get a discount from us. If they don't meet it, nothing happens. If they deteriorate, then a penalty kicks in. And as you can imagine, the first transaction was for a client, was for Philips, also out there in the market, and was a 1 billion facility with 13 banks involved. So it was not only sort of to agree with our client on, yes, this is the right way forward, but also, of course, with getting those other banks on board. And in most of those banks, but also at that time with most of our clients, you talk to the CFO, you talk to the treasurer, and you talk to the finance people at the other banks, and then sustainability just wasn't the topic. I remember very well that in some of my client conversations too, that a CFO said, "Well, you want to talk sustainability? Well, then I think we have somewhere a sustainability team, so maybe it's a good idea to talk there." But if you look at the market today, it is really at the core also of the financial streams in our clients' operations. And why that is? Because often you can get also cheaper funding. It also strikes towards the goals that a CEO often has. And it is really a strategic direction. Because if you think now about transition of your company, maybe you're not sustainable and you want to move there. You have, for example, commitment to the Paris Agreement. You need to think about, how do I want to move my business forward? What kind of investment should I be making? What kind of divestment should I be making? So it really comes at the core of the financial system and the financial and all the capital streams of our clients. So today it's really, and I would have never imagined, I think, when I started, but this market is just accelerating so fast. So we have to look at sort of what we have also in terms of the product areas, and where we see also a lot of growth is indeed in that lending space where you have sustainability linked transactions. But we also finance specifically, for example, for a car manufacturer, the electrification fleet. And that is then really tied towards investing in that activity. But at the same time, we also offer a structure and advise our clients on how to issue bonds, how to link that towards investors, what do investors indeed want to see. And we also have, and those are sort of the lending and the bond activities are really also activities that are large in scale. I mentioned already a 1 billion transaction, but we've also recently done a 10 billion transaction, which was the ever largest at that moment in time we did, and that was for AB InBev. But I also strongly believed when really building this market that, yes, you need to focus on this sort of short-term success in terms of having really those big deals, getting the numbers in, making sure that you are seen as also a financially relevant contributor towards the revenues of the bank. But at the same time, there's so much happening in this market, so you also need to be pioneering and looking at what is going to happen next. So I've also established two teams which are more in the pioneering area. One is more on the equity side, one is more on the smaller type of newer technology financing on the lending side. So both of them really look at what are newer type of technologies and what are newer types of business models to help us also to be a step ahead and to be really prepared for the future. So in that sense, we have the smaller part, but we also have the, of course, the really large transactions. And I think that it's important to recognize that you have indeed those both strategies, because otherwise you will never be able to really also establish this internal knowledge that you need to have, the knowledge on newer type of technologies, be a trusted partner for your client, to really be also the advisor there. So I think it works very well to have indeed those two directions. I think if I look a bit more broadly, there's also a lot of discussion at this moment on climate strategies, on how you deal with the Paris Agreement, with net zero. So we've established also in 2017 an approach where we said we want to commit 600 billion of our portfolio to align with the Paris Agreement. And that counts for most of the really significant GHG contributors of our portfolio. And we have per sector, we have identified together with TBRI Investing Initiative, which is an independent scientific external party, what are the technological changes needed per sector to drive and meet the Paris Agreement. And we map our portfolio on that, we map our clients on that, and we help also in the dialogue that we have with them. How are you doing? Are you above the curve? Are you at the curve? Or are you behind? And in that way, we can also really work with them on, okay, is it your ambition indeed to transition? Then yes, we're going to embark with you on this journey and really specifically tie in financing strategies on how you can indeed get ahead of the curve, preferably, at least at the curve. And that's also a system that we established. I mean, at the time we developed it, it was still the case that I could report on GHG impact of a transaction, and another bank could do the same, but the outcome could be totally different. So we said, well, if we develop something like that, it should also be something that others can use as well. So we've developed it in an open source way, where now also 33 banks are really teaming up with us in also using this approach in making sure that the portfolios are moving towards the Paris Agreement. We've also published, and I think as the only bank so far, really published the very transparently on what is the progress, where is our portfolio today, and there you see also that for certain sectors maybe we're slightly ahead. For other sectors, we may be slightly behind. For some, we are at the curve. So it also gives us, but also by publishing it externally, also a push on this. We are really serious about it, but we also really want to steer this business going forward, so that in the next report we have been able to also show that we've been able to make steps and really steer our portfolio. And of course, that's also all included into how we steer our business internally with KPIs, with systems tracking it. So it has also really helped in getting this whole topic much more further embedded. I mean, my team can structure specific sustainable transactions, but there's of course much more that the bank can do by choosing which client to engage with, what conversations should I be having. And sustainability should never be only a siloed approach by just one or a few teams. It should really be in the DNA and really be embraced by the entire company. And you see that, especially the last couple of years, you see that really happening. That topic, everyone wants to talk about this topic. Oh, not only clients, but also internally. It is really something that, where people really get positive energy from, but also realize with all the pressures around us, all the pressure on climate change, that this is really the way to go, and it's important to address the topic. So it has been a great journey in really building these startups, because when I started back in 2013 on the commercial side, it was just me and a trainee. And if you look indeed where the market now is, but also how competition is really accelerating on this, it's great to see that it has really passed the stage of being a trend. It's a must, and it is also there to stay.
You have a very unusual CV, not a traditional banking CV. You told me you studied philosophy and environmental sciences. You were en route to be an Olympic equestrian for the Olympic Games in Atlanta. You had an accident and you were not able to pursue that, and you kind of retooled, went in this direction, were hired by the bank. But I remember many of the banks, whether it's ABN or ING or Fortis or UBS, at that time, they were not really that keen on this subject. And often they would hire a woman who was underfinanced, understaffed, put her in a corner office, keep her quiet, and, let's see if she can build community or build networks and build an ecosystem there. And usually they were very good at that. But the minute that it went well, they kind of moved the woman aside, and then the guy came forward and cut the ribbon and took all the credit. So, but you're there. You're still there. Your team is getting bigger. The amounts, 10 billion now, are getting even more enormous. So it's becoming a very important strategy of the bank. I don't think you have any problem in finding sourcing opportunities. I think loads of them come to you. But how are you able to get buy-in within the bank? Go back to when you started with that one guy or one woman assistant, and you were trying to get people interested, and they would say, look, I got to bring in AUMs. I have to reach my target. Is this going to get me AUMs? So how did you deal with that?
Well, I think the first area where I entered was on the risk domain, and so establishing the environmental and social risk approach for ING. And essentially, that there were some statements on what we would not finance, but it was totally not implemented in procedures, in decision making, etc. And indeed, I think hiring me at that time was sort of okay, we have to have someone there, but business will just continue. But there were transactions where I just had to clearly say no, and only the board could overrule me, and that just doesn't happen. So in that sense, I think people suddenly also realized, hey, wow, this can be serious business. Maybe this lady, we should take a bit more caution in dealing with her. At the same time, people also really appreciated that I have always looked at it. Yes, I mean, there are boundaries, and if you cross really a boundary, then it's a no-go. But I've always looked at it also pragmatically on, can we not make it happen or get into dialogue with a client? So I think the person also where I had sort of the most discussion with, and discussion is probably not a good word, so you can imagine how that was also the person that later on said, well, do you not want to move to the commercial side? Because I think there could be a business opportunity there. So I think that with this pragmatism, but also really having an eye for the business, and having shown that I could build something successful, also convinced that person to say, okay, yes, just go ahead and do it. And then indeed, when I started that with this one trainee next to me, my strategy was to mobilize the network. I mean, not to mobilize the people that didn't believe in sustainability, but there are always a handful of people that say, yes, I'm very interested in this. I want to also carry some of the weight. And so I've mobilized them, and that group became much bigger also after indeed showing successes. And you always need to have a couple of different strategies, I think, to make sure that you get everyone in the boat. So even the non-believers. And the non-believers I got on board via showing, yes, this yields revenues. The sort of middle group said, well, let's wait and see in the beginning. But then also saw that some of those non-believers were coming on board and saw that a lot of those first group of people that were really intrinsically motivated, that group was growing, and they were so energetic about this topic that suddenly you get a sort of whole movement. And yeah, and I think by indeed also having the ability to identify those market opportunities, like we've launched a lot of first-in-kind type of transactions, whether that's on the bond side, the financial market side, or on the lending side, that has also proven, okay, yes, you are able to adapt and to adjust and to indeed see those market opportunities. So I think that's one of the things why also we are where we are at this moment, and why I am there.
I mean, the bank has lots of different parts. It used to be even bigger when National Nederlanden, the insurance, was part of that. Now it's separate. Your focus is, correct me if I'm wrong, is mainly debt financing, correct? For infrastructure and bonds, not so much wealth management. But do you have people from wealth management saying, hey, this is really interesting what you're doing. We have lots of clients that are more and more interested. Can I come around and hang out with you? Or can you come speak to my clients? Can you help me build that infrastructure within the other parts?
Yeah, although officially my responsibility is indeed the wholesale bank. So that means that it's not the private banking clients, and private banking in general at ING is not how nothing compared if you look, for example, at a UBS or a Credit Suisse. We've also had, even though I have two of those pioneering teams, we also come across lots of transactions that are still too early stage or too difficult to be bankable at that moment. So, but I do believe that if we provide already the opening at an early stage, that maybe at a later stage we can indeed bank this client. So I've also, that was for me also a starting point to have discussions with private banking and with our family offices team as well, to say, hey, maybe you can play a role there, or your private banking clients, maybe they are interested to step into this, and we can then also step into it later. So in that sense, we've organized also various investment sessions where indeed those opportunities that were too early for us, that at least we've proposed them towards investors to see if they could play a role. And I think making that connection and trying always to service a client is something which is important. And of course, that's not always possible, and especially sometimes in the very newer type of technologies in the sustainability field. It is what it is. But then a bank is also just having its role in the financial sector, and sometimes you just need to go to VC capital.
And I found that the ones doing the most talk the least, and the ones doing the least talk the most. And I recently looked at the list, fossil banks, and of course, the four biggest funders in the world are JP Morgan, Citi, Wells Fargo, and Bank of America. But it's also the organizations that are claiming to really be totally committed to sustainability. ING, I think, is number 28 in that list of things. what are you trying to? I know it's a big organization. You've got a lot. You can't fight every battle, throw all of your weight behind everything. So how do you constantly move that needle that we want to be less financing carbon intensive industry, whereas you have a guy who brought in a deal who's going to make a very nice commission on this deal, and here's Leonie said, I'm sorry, we can't do this. They said, what do you mean you can't do it? It's a low risk financial risk, and I'm going to make a fortune on this commission. How are you handling those situations?
Well, for example, if we take the coal industry, for us, the reason to have a very strict coal policy and that we almost have no exposure to the coal industry anymore is also a matter of credit risk, because and you see that now more and more also with the climate being very high on the agenda, also pushed, of course, through the regulatory environment. But that results into the fact that you also start to think, okay, is it not a risk actually to just have 15 years exposure towards a coal plant or a company that is involved in a business where you may think that's not there anymore in X number of years. So that's also what I mean in the whole topic has become much more ingrained into the whole decision making, into all the metrics, because those kind of decisions are not only sustainability related, they are also have an impact on potential risk, on potential credit risk that you won't get your money back. And that's essentially always what the bank wants. We want to get our money back. So if you then look at other fossil fuels, we have our commitment to align with the Paris Agreement. So there also we built on the scenarios of the International Energy Agency, and through that we know when how the industry needs to change and how much levels of fossil fuel will still be there to drive the economy in 2030, 2050 now with net zero. And by knowing that, you also know how to scale down your portfolio in the fossil fuels area. But at the same time, and this week, for example, we've done a transaction. It's a company that traditionally was an oil company, but has a very strong ambition to change. And that change, which is of course also driven by, I need to be resilient in the future. And we have structured a transaction for them, which is purely tied to their investments in renewables, in energy efficiency, etc. So they're really trying to rebuild the company, expanding in those areas. And that is also why sustainability becomes such a strategic priority, because it really influences your investment and divestment decisions. If you're really serious about, yes, sustainable business is better business and I want to transition.
The EU came out with a new taxonomy which goes into effect this year or the end of the year, which is trying to set guidelines. What is a green bond? What is a sustainable investment? Some will have to adapt. Some will say, great, they're finally doing it at the level that we should. What do you think of this EU taxonomy? What role do you think it's going to play in helping or hurting you develop sustainable finance within ING?
I think it helps, and I also welcome the initiative. And there are a couple of reasons. On the one hand, it's good to have a more standardized taxonomy out there, so that we can all have the same understanding on what are sustainable activities, and that will help also keep the credibility also of the sustainable finance market, that you just have to abide by certain standards and common understanding on what is sustainable. So we've already also, with the draft taxonomies that were out there in the last couple of months, advised clients on, okay, if you want to structure a green bond, this is how we advise to do it, because then it's in line with the taxonomy and will therefore also attract more investors. At the same time, it's also it will also create a lot of disclosure and transparency in the market, because our clients all need to report on their revenues, their OPEX and their CAPEX that meets the taxonomy definitions. And for ING itself, we will need to have to report on what is our green asset ratio. So what portion of our balance sheet lending does fulfill the criteria of the taxonomy. So you'll see much more transparency out there to really see, okay, this one is really on track, this one could step up further. And I think transparency is really key in the whole sustainability market because that also drives the credibility.
I was asked years ago to advise the UITP, which represents all the public transport infrastructure systems of the world, and they have to raise 2.3 trillion, 2.4 trillion every year. There's 1,400 members, and I said to them as a joke, they were looking for ways of financing it. I says, when you borrow the money, do you pay it back? He said, yeah, we're AA rated. We're public-private partnerships. I said, well, why don't you just go to asset owners, because you offer what they're looking for. You offer yield, they're low to zero carbon, steady cash flow, no volatility, etc. But I rarely bumped into institutional investors who were focused on public transport infrastructure. Very few were doing green bonds with. I think India did a small portion of it for Mumbai. Why is that? Why is it public transport infrastructure is not sexy for banks like yours?
I don't know, because we also do those kind of financings. Although maybe it not always be on the public side, but also definitely on the private side. So we have, when it comes to also more a pioneering infrastructure, we have financed a lot of charging infrastructures. That's always often there's a corporate behind it. So in that sense, it's not public. But we've also with export finance, for example, we've also financed a lot of the climate adaptation projects for governments. So, for example, countries that are really at risk by being flooded, to have then corporates to do the work on, for example, making an island higher or making sure that there's coastal protection. And that's financed all by the government. So the government is our client, but then we know who they bring in. And on the basis thereof is sort of a tripartite structure, you finance it. And so in that sense, it's definitely there. But yeah, indeed, you see that governments do issue also green bonds, and part of it is used for infrastructure, and we support them as well. So yeah, it's but usually those public parties are not going to the market either, because they have other funding mechanisms.
You said that you're no longer financing coal-related plants. So what is your line in the sand that says we won't, or I won't stand behind financing this year, and what will it be next year? What is for you that this is not sustainable finance, and I just can't justify this?
Well, only what we don't do, that's really the environmental social risk side. So that's what I've left behind when joining the commercial side. So essentially, they draw the lines on what standards clients need to abide by already when they enter the bank. That's being tested, like the whole Know Your Customer systems that are out there also have those environmental and social risk standards in place, and indeed also are tested on involvement in weapons, involvement in coal, all kind of restrictions that are in place. And what I do is really driving the opportunity. So I sometimes explain it also as it's just a sort of the normal football league that is done by the general bank, but I really focus on the Champions League, on really making sure that we accelerate going forward on sustainability. Not that the Champions League is so sustainable, but just to illustrate that you want to focus really on those that drive and shape the market as well.
IEA came out with a report this week. This is big. I mean, some people might not be too excited about it, but if you ever read IEA in the past, this is a very big change for them, that the entire energy mix has to be changed and not taking any more fossil fuels out of the ground. So how did ING and your team respond to this? Because you might still be funding or getting requests from that, because it's a very influential organization, IEA.
Yeah, and in their previous scenario, there was also still quite some room for fossil fuels, and in most of the scenarios that we've seen so far, also fossil fuels still play an important part, though less big in the future. So the report that came out, and I think it was yesterday or maybe the day before, someone's phone is ringing.
Yeah, it's. I'm sorry. I'm at my mother's house, so she's very popular. So she gets.
Oh, but that's good. No, so the report that came out this week, we're digesting it, and like we have indeed our commitment to align with the Paris Agreement based also on EIA scenarios. We are currently calculating, and so it's too early to really say something on the strategy, but it is being looked at now on how to translate that into our approach indeed.
Agriculture is the largest employer in the world. It's also, if we can increase the CO2 sequestering in the soil by a small amount, we can really offset a lot. But traditionally, banks like ING or others that are big infrastructure are not financing any kind of technology innovation or that type of financing, yet the potential is clearly there. What can be done from the, let's say, the sell side, the developers, the project developers, the organizations that are creating new technology, to be able to access your type of funding? Because it might not be a $10 billion deal, it might be much smaller. Do you look at that space at all?
Well, a couple of examples maybe to mention that, and we do have very good agri experts also, and some even also practicing it next to their job. I think, was it last month or maybe the month before, we've also closed a transaction with Friesland Campina, where KPIs were also going beyond their own business operations, but also going towards improvements at supplier level and quality of the ingredients, etc. So in that sense, we do influence that value chain through financing some of the larger clients. And within our more pioneering business, we're also looking at the insect type of businesses, replacements of meat. There's a variety of semi-related agricultural activities that we do finance. On the technological side, we have done also quite a bit on geothermal for the glass houses, especially also in the Netherlands, and also to connect that infrastructure for heating and cooling to really lower the energy consumption of those producers. In terms of really technological innovations when it comes to the quality of soil, of irrigation, etc. That's to a lesser extent indeed where we have been involved in. But definitely that's not something where we're closed for, but the opportunities have not yet been presented in a way that it's indeed on a bankable level.
Your department doesn't invest in private equity deals. It's mainly around debt and no early stage VC, no funding of other funds in this space?
No, we don't do funds of funds. We do finance private equity and, for example, also the acquisitions that they do. And there we see more and more also within the private equity space that sustainability becomes a key topic and that they want to also tie in sustainability features into those financings. We do with our equity portfolio, we do, it's not the VC type of business, it's not the startups, it's more sort of the scale-ups, or in some cases still the pilot factory and then being rolled out towards a bigger scale.
I see. I'm going to take a couple of the questions. Venon from Ghana was saying, amazing, Leonie. I think it has been a long journey for most of us in the sector. How did you communicate that vision to your superiors? Because that is always the greatest challenge when starting.
Yeah, I think again that the sort of the strategic directions that I mentioned before on making sure you get the early adapters on board, that they eventually draw in the middle group and convince the non-believers through hard financials in the way that they understand it best. So I think just showing that sustainable business is better business, yields revenue, that has been also the way to communicate about it. And next to that, you see also that suddenly, if you do these kind of things, your rating improves. Your investors are more interested in the topic. You attract other investors as well that may not be there if you're not a sustainability leader. And you get a lot of publicity around it. So, and those are things that also land with indeed our board, and they say, hey, this is interesting because it really gets a lot of positiveness around it.
And you mentioned about pricing or interest. Are you providing a discount for green-related investment that your department is doing? Because you spoke of some very large project, or a penalty if they don't achieve their milestones.
Yeah, it's both ways. So it's a discount on the margin if you meet agreed criteria, or it's a penalty if it indeed deteriorates. That's just a slight discount. It's not that we want to attract companies that say, okay, yes, I want to have that structure, but actually I'm not serious about this topic. So it needs to be, the first dialogue needs to be, we both have very strong sustainability ambitions, and then you follow up with indeed getting that structure in place. So that's one of the mechanisms that we have. In the Netherlands, we also have very specific approaches for real estate, and having cheaper funding for real estate companies that have a large portion of their portfolio in the highest levels of sustainability classifications. Mm-hmm. We've also financed a lot of the improvements that they wanted to make. So we've also at some point in time said, for example, certain levels, so energy labels, we don't finance anymore unless you have a transition plan, and then we'll help you realizing that transition, and we give you funding for that. And on the bond side, you see that because of the high investor demand, and investors are massively greening their portfolios, because of that high demand, there is often better funding for green structured or sustainability structured bonds than for the regular ones.
Jacques, here's a question slightly different from what I was asking. The innovations required to actually deliver on sustainability through, say, implementation of working and commercially viable circular economy models are generally being developed by small, young companies. How do you or does ING support those initiatives or those companies?
Well, of course, we work also with various companies, especially when it comes, for example, to data. But we also have our own innovation lab, where there are also a couple of ventures addressing some of the sustainability challenges, and ideally to be launched later on into the market. And with the pioneering activities, where we provide equity, and that's really ING's own equity, where we also enter into scale-ups. So last year we've established together with the Rotterdam Port, but also with Engie and Wärtsilä, we've established a new company which is called ZES. And ZES is providing batteries on a pay-per-use basis for inland shipping. And as you probably know, the bunker fuels of inland shipping have a heavy impact on CO2 of GHG emissions. And by having those stations that those companies do not necessarily have to invest themselves a significant amount to really change their fleet, they can use those batteries on a pay-per-use basis, which is much more cost efficient for them. And even those batteries will also be used at least once time is there that we can have festivals again, like those kind of things. They can also be used in a second life for those purposes.
There's net zero is a new brand or flavor of the month. Everybody's got to be net zero, and I was impressed with the number of people that signed up to net zero asset management. But there are lots of pledges, but it doesn't mean anybody delivers on anything. You know, I would still like to be a ski bum, but I'm not there yet. So, do you believe that all of these institutions, if we just or ignore them and just focus on ING, 20, 30, 50% of net zero achievement, and 2050, 100% net zero?
Well, we have this approach to align with the Paris commitment, and of course that was before we launched that, much before all those net zero commitments. And part of the scenarios that we use are based on net zero scenarios. Others we are also looking into should we scale those up, be more ambitious than the Paris Agreement, and move towards net zero. But therefore, I think it's important that we've published this progress report last year covering how are we doing with regard to all those sectors when it comes to our commitment on the Paris Agreement. And so transparency on how you do it, having a robust approach is essential. I mean, I can't look in the kitchen of all the parties that have committed to net zero, but I would recommend everyone indeed to have a very transparent approach and disclose on your progress, because that's the only way it will be tangible.
Aaron wanted to know, how much do the UN SDGs drive the ESG sector in terms of providing targets and metrics for management? In ING's case, of course.
Yeah, I mean, the SDGs are very important, and of course the umbrella for a lot of all essentially sustainability topics that are out there. At the same time, they are also very broad, and they are also in some cases more directed at the public sector. So we have very firm sustainability targets, and also translated those internally into KPIs. And of course, that ties into SDGs. Some are indeed more on the renewable energy, clean energy for all side. Some are focused on the social side, by providing financial health activities for our clients, but also where we finance public schooling, public health activities. For example, last year we've also launched as a first in kind in the market the first social COVID-19 bond, which was a bond directed also to address investments specifically for those activities that are impacted by the pandemic on the social side. So think about unemployment, inequality, social housing, etc. So those kind of activities, and that all links to the SDG. But if you say the SDG, that is my commitment, then it's still very vague. So you need to translate it in very tangible activities.
Okay. My general counsel, Beata Dunn, wanted to know, if you were going to start a startup, what's your niche spot?
Good question. Well, I have a lot of affinity with the whole automotive sector and the electrification of it. I'm also one of the, I think, first, probably not the first, but one of the earlier electric drivers. So I'm now already with my third electric car. So that's definitely an industry that I like a lot. Based, of course, on my banking back experience now, I could also play a good role in helping indeed how to get access to funding, making sure that there's that connection between to which financial sector player you need to go for which type of investment. So there's a whole variety, but I wouldn't exclude indeed that I would start my own company at some point in time.
Okay. Indra Guha wanted to know, do you quantitatively measure sustainability impact before you decide on an investment? And if yes, how?
Yeah, we have a system in place which identifies per sector all the sustainability activities. So it's not necessarily purely directed at the impact, but it is what is sustainable. And that also gets a mark into the system. So even before the taxonomy came into place, already from 2013 on, when I built the franchise, we've developed that to really also be able to measure on how much growth is there. If you look, for example, at the green bonds that ING issues, we specifically also attach then impact figures to it on the portfolio that is part of the green bond.
David wanted to know, how large do you perceive the knowledge gap to be between large asset managers and the available investable climate solutions? What is being most overlooked in the climate solutions investment space?
Oh, that's a difficult question. Yeah, I think in general, it is something where the financial sector really needs to step up further, is to indeed understand what are newer type of technologies. And with sustainability, the interesting thing is also that backward looking, which was usually the case in a lot of the models that the financial sector is using, for sustainability, you need to be forward looking. And so getting an insight in what is going to be the next new normal, that is what you need, where you need to develop an eye for. So that means that you need to get understanding of what are newer type of technologies and which are the ones that have a good potential for success. So we have also established a couple of knowledge hubs on specific areas like hydrocarbon, batteries, etc., to really make sure that we have specialists internally that can really follow those markets. So you see also, interestingly, or mentioned that I studied philosophy, but there are many more people in the bank that don't have an economic background. So we also have a lot of engineers in the company. And by bringing that knowledge also together, you can really establish also much better understanding and advise your clients as well on, okay, if your industry needs to change, your business model needs to change, what are then technologies where you need to invest in?
Okay, we have it getting overwhelmed with questions now. Why is it that productivity has improved by several 100% over the past 50 years, but the household wealth of most ordinary folk has declined significantly? Is it maybe that banks and investors only flow money into essential unsustainable investments with little true value impact for society, not to mention the environment? Do you think that that's true?
Find it difficult to judge upon that because I don't have too much insight in those numbers. But I generally don't think that we invest in the wrong things. I do think that the financial sector in general can step up by accelerating in financing indeed more sustainability also on the social side.
Okay. RV Perez want to know, do you ever encounter a situation where the sovereign rating of a country was a hindrance to green bond investment? A lot of the developing countries who are vulnerable to climate change or who need to adapt are from countries with not so acceptable sovereign ratings. Is there a way to go around this or deal with it?
Well, on the bond side, that remains very much indeed the domain of the multilaterals, where they can step in, also because they have a different mandate than commercial banks. The examples that I mentioned on islands getting climate protection, either by getting various infrastructure to make sure that they are at a higher level, or that they have just the flooding protection around it. those have been also with countries that we normally would not bank. But then there are various ways how to ensure that you can do that, and this is then a lending example. But you have, for example, the export credit agencies that do leverage on the government. So in those countries where we would normally not be able to bank that government, an export finance credit agency can, and then based on that guarantee that they give, we can enter as well.
Thank you. Michael wanted to know, do you see a big difference between the renewable energy implementation between the developing and developed world?
You see various initiatives. I mean, it's maybe you see most of the larger scale and innovative scale investments in more developed countries. But at the same time, you see also lots of much smaller initiatives on making sure that there's electricity to provided to certain regions where there's a lack of a grid, and therefore with solar panels, the day can suddenly be extended with a couple of hours, which enables children to do their homework, enables whole families to also to work because they can cook later. So there are I think it's difficult to judge on saying, well, it only happens in the developed countries. It's just different types of activities that are taking place.
Job had a job idea for you and also a question. What does it take, Leonie, and how long before sustainable finance is fully adopted in any financing ING provides? Or differently, when are you CEO of ING instead of SF? I don't know who SF is. I guess it's the present CEO.
No, SF is Sustainable Finance.
Okay.
At least that's my immediate interpretation with it. Ideally, sustainability becomes the new normal, and anything should be sustainable. And that's also, if we work towards a net zero world, then that is the reality. At the same time, I think during this whole transition period, still, I am embedding it a lot in the organization so that people can have their own conversations with clients, that they understand the topic, that they do have those basic conversations. But you also need, based on really all the fast developments, all the technological developments, the regulatory developments, you also need to have a very deep knowledge in-house, a center of excellence that can really make the difference also with clients and really be that strategic sparring partner. So for the next coming years, I still think that you need to have both. Bring the whole organization up to speed on sustainability, but differentiate through a center of excellence. So I would also not see, for example, a team like Sustainable Finance that suddenly becomes 1,000 people, because you really need to be that center of excellence.
Okay. Jacques wanted to know, if ethical investments are outperforming traditional funds last year, do you think this is due to the pandemic or that it will continue? And then he gives a link to a Guardian article.
Well, you see in general that sustainable investment portfolios are performing already for a long time very good. So the pandemic has probably accelerated the awareness and also maybe some of the investments. And you see also, we did a research also under a lot of investors and corporates, and there you see that 60% of our clients, not only our clients, it's much wider, say that the pandemic has accelerated the transformation towards sustainability for them, and that they intend to drive the agenda in a more accelerated manner going forward. So in that sense, the pandemic has definitely fueled this further. But on the basis where I already started in 2013 to have this as a commercial opportunity, was purely on the basis sustainable business is better business. I also strongly believe that you will be a better company, also in terms of your creditworthiness, if you make yourself resilient for the future. And that is becoming more sustainable.
final question, well, the final question I'm going to take. Peter, what is the difference between zero impact and net zero impact? Is there any difference? Are you there?
I saw it. I thought that the.
Oh, no, that always happens after 60 minutes.
Okay. The net zero, I would say it's balancing out, and zero is really zero. But that's just my take on this. Happy to hear other views in that sense.
We're coming down to the end. First of all, I really want to thank you, because most of the time when we invite someone from a large financial institution, there's dozens of minders around them, kind of guarding, censoring questions. And I really appreciate the fact that you're open to dealing with any question that comes forward and just being very straightforward and give a no BS answer. So that I want to thank you very, very much. I want to thank you also for the time that you give. We will send a link to the replay for those who didn't join or those that want to watch again. I'll send a copy to your team. It's been really a joy, and I really like the fact about the whole resilience issue, because I saw in the last election everybody was fighting about all these wasted windmills, and they were not missing the point about making the economy and those companies much more resilient, which is really that is a much easier thing to sell than this whole idea of, we're only going to reduce CO2 emissions worldwide by such a small percentage. And I think that's really very, very key. So I want to thank you for that. I'd like to take a group selfie with everyone who's here. So I'll just start, just wave to the camera, and it'll take a photo of yourself, and then I'll send you a copy of that with the link. And I want to thank you, Leonie. This has been great. I really, really appreciate your time, because I know how busy you are. And congratulations on getting all of these large sums committed. I want to thank our entire team, our entire production crew, Sam, our producer, Crypto Genius, and Ramen Critic, Ricky, my absolute better half with no filter, Xi Jinping, our head of transparency and integrity, the Myanmar generals, our power sharing advisors, Vladimir Putin, our head of conflict resolution, Jeff Bezos, our human resources and full text compliance leader, Mark Rutte, our memory expert, Elon Musk, our humility coach. Thank you all very, very much. And thank you all for joining us. Please take a selfie so I can share it with you. And Leonie, thanks again. You're really a star. And congratulations on all of the achievement that you've done with ING, and always staying yourself. You're great. Thank you so much.
Thank you very much, and thanks also for all the nice questions.
Yeah, and if you want me to share any report that the ING made with the mailing that I send about the replay, just send it to me and I'll add that to the mailing.
Yeah. Okay, great. Thank you. So have a great day.
You too. Bye-bye. Just go out. Yeah, you can go out the red door over there. Great. Stay well. Okay.